Matt McLennan is head of First Eagle's global value team. Matt, it's good to have you here. I don't want to overstate it. Have you been buying software names in recent weeks?
Well, it's great to see you, Kelly, and thank you for having me on the show. If you look back over the year-to-date period, we have committed some capital to the software space. I think when you look at the stocks that you mentioned, they've come down to revenue multiples now that are in the 3 range, which is about half of where the private market transactions were in recent years, and a small fraction of where these companies' valuations were a few years ago when their rates of growth were a little more torrid. I think the thing to focus on here is that these companies are now at multiples of revenues that mean that if they were to stop growing and if they were to skinny down their expenses, they'd be trading at quite modest multiples of earnings. And so the reality is that these companies still are growing. If you look at Workday or Salesforce, for example, they're expected to grow revenues at about 10%. But they're growing with a focus on more efficiency, and we haven't seen this kind of favorable constellation for a while. And the final point I'll mention here is that obviously the fear has been AI-related disruption, but these companies that touch the majority of Fortune 500 companies are extremely well positioned insofar as that they have these enormous proprietary databases, whether it's of HR systems or the Salesforce and marketing systems, and they have the ability to conceptually expand their addressable market through AI, so they're not just victims.
So how much software and which software names are you buying or owning here?
If you look across our portfolio, we have a range of different software investments. I mentioned Workday and I mentioned Salesforce. We also have some other stakes in the portfolio in the software arena. We have an ownership position in Dassault, which is a French-listed software company that specializes in 3D CAD software. And again, mission-critical software. If you're going to be designing a jet engine for a commercial airliner, that needs to work. It can't be based upon a predictive token. And we have smaller investments in Microsoft. And we also have an investment in Oracle. So we have a range of software investments that have layered into our portfolio here.
Today, we have the news that for the first time in its 51-year history, Microsoft is going to offer voluntary buyouts. When you describe that perhaps it would be viewed as a net positive by investors for software names to get more efficient, i.e. do more layoffs, does this announcement from Microsoft fit into that idea?
It does. I think what these companies are realizing is that they've invested enormously through the profit and loss statement over the last decade in sort of expanding their product footprints, their reach with clients, and they're now very embedded with their enterprise customers. And so the mindset has definitely shifted to one of how do we maximize the efficiency of this platform of employees that we have. And whether it's using AI to assist in coding costs or being judicious in the rate at which one is expanding the sales force, or perhaps being a little less willing to issue stock options and perhaps being more focused on buying back stock, all of these are potential efficiency gains at the margin that these software companies are increasingly focusing on.